Hi, I'm Kate Miller and welcome to Property Focus. Making headlines this week, Sydney's western suburbs get off to a strong start in 2011 and the government's proposed ban on exit fees comes under criticism again. But first to our lead story. Adelaide has been highlighted as a consistent performer, offering property investors secure opportunities. Speaking with Property Focus, Tim Lawless, RP Data Research Director, said that while Adelaide's market rarely took centre stage, it certainly offered valuable investment opportunities.
Adelaide has been a very consistent performer, and really since about 2007, or 2007 alone, Adelaide was the standout of any capital city, recording the highest growth rates of about 25% over the year. Come 2009 and early 2010, Adelaide has pretty much tracked at the national average, so a very quiet performer, kind of flying under the radar because it doesn't get a lot of attention from investors. But Adelaide is still showing one of the most affordable price points to be buying into a capital city marketplace. Yields in Adelaide are actually fairly reasonable and probably does provide a fairly decent investment opportunity.
Sydney's western suburbs are showing signs of a bright future, with the market starting off the new year on robust footing. Phillip Starr, principal of Starr Partners Real Estate, said buying and selling activity had been well balanced in the first couple of months of the year.
Yeah, well, look, I suppose typically January was a slower start, but we found February very strong, and that's continued on into March. So we've had a good, strong market, and I think it shows no underlying strength in buyers and sellers. We're finding it's becoming more of a balanced market, which is good. So we're getting a little bit more stock coming on in certain suburbs, not all, and I think that's been a good regular turnover of property.
Mr. Starr said ongoing demand from international immigration, as well as good local demand, would underpin prices in the area moving forward.
Well, we've had an increase over the last 3 years. Or I'd say you've had a very slow market prior to that, and we've caught up a lot of lost ground, from previous times. And so we've had, on average, about 10% increase over the last 2 years. And I'd say at the moment the prices are probably leveled off again, and I think you'll get little surges along the way. Probably we could have a 5% increase over the whole of this year, but I don't see anything booming as such. I think it's a good level market actually.
And the government's decision to ban exit fees has come under fire again, described as ill thought out by a leading mortgage industry figure. Kim Dalton of Sachs Consulting said the exit fee ban was a cheap way for the government to be seen as promoting competition for consumers, but that the government was making an inaccurate connection between banks' profitability and housing affordability.
Banks, particularly banks, I shouldn't single out banks, but particularly banks are making quite economic profits at the moment for a host of reasons. And they're looking at the affordability problem that exists in Australia and making a connection between the two, banking profitability and the fact that there's an affordability issue in Australia. I don't think the two are particularly connected. I think that the real elephant in the room, in isolation, in fact it's an elephant the size of a woolly mammoth, is that houses in Australia just cost too much. I think that's the real issue.
And that's what's making news for this week. Thanks for joining us. I'm Kate Miller. See you soon.